Stock of the day, shining the spotlight on Nitro Software, reporting 61% growth in annual recurring revenue. Looking ahead, the company is expecting improved operating earnings FY22 based on lower operating expenditure, reflecting what it calls enhanced business efficiencies, while also forecasting a move forward toward a cash flow break-even profile in the second half of next year. The return to cash flow break-even was foreshadowed by Chief Executive Sam Chandler at our Tech Decoded event yesterday.
So we were investing last year, to get more scale and take advantage of the market opportunity that was in front of us. Same this year, but we are returning the company back to that kind of cash flow break-even profile in the second half of next year. So we've gone through a couple of periods in the company's life where we've chosen to invest heavily, usually for sort of a couple of years at a time. And we're sort of doing that, last year and this year, but we'll return the thing back to the cash flow break-even profile, towards the second half of next year.
Okay, anyone who was impressed with that yesterday and bought some stock is feeling pretty chuffed this morning, let me tell you. You can still access that event to watch as catch up, featuring the chief executives of Nitro, also EML, which we talked about here on the call yesterday, Life 360, which we did as well, and Technology One via ausbiz.co/techdecoded. So stock of the day, Nitro. What do you think of Nitro, Mark?
Yeah, obviously the market received the result really well today, up about 25%, which is fantastic until you sort of roll the middle mouse button back and see the scale of the chart. So it's fallen from about $4 sort of start of the year with all that tech, all the tech coming off. Look, they've got good management. They've got really, big customers, solid customers, BP, Lloyds Bank, Colliers, etc. So,
so it's a productivity tool, isn't it?
Yeah. So it's I think it's mainly
corporates.
for PDF documents and things, yes, and electronic signing, etc. Coincidentally, had a new client who works at Colliers, and he was, strangely enough, discussing how easy that thing was to use. Account opening documents are the bane of my existence sometimes. And they were returned in quick, smart fashion. So it's obviously a pretty easy and good product to use. Business-wise, they're doing all the right things. Obviously, they need to get. It's just not the market at the moment for these companies that aren't quite making money. God knows where the price would be, if they'd come out with this result a year ago
Well, Goldman Sachs even has a price target of $450 now.
Yeah, no, look, I think the consensus, I think there was been an upgrade from all parties, all four analysts that cover it this morning. One of them might have even been in the $6 range or something silly. So I'm not 100% on that, but everyone upgraded it basically on the back of this. But yeah, look, you're buying it at the bottom of the range. Whether you're going to get, this is a great catalyst, obviously, but whether the tech storm sort of passed in the US, which is probably going to be the defining price action factor for the next sort of three months until they have their annual report. So look, for me, tech's generally is just on the watch list overall. Really, like I've got our favourites, sort of Hub24, Ordinate, and say Xero, and we don't have a big chunk of those. So until I'm getting
Ordinate's back to $6.
I know. So until I'm fully allocated there, I'm probably not looking outside of those three stocks, because I think those high quality companies will be the ones that turn sort of first. So,
Michael.
Yeah, interesting. The chart earlier for Nitro, it started at $1 when COVID kicked off, and then all these share prices went through the roof because rates were going down. Everyone was looking at these sorts of growth companies that could even benefit from the working from home environment. So $1 to $4, but of course all the way back to $1 again. So that was a period of the market where it didn't matter if these businesses were losing money, as long as they were gaining market share. It didn't really matter. But clearly that's been turned upside down over the last several months. So businesses like this, which are not profitable, no one wants to pay the huge premiums. So I think that will persist for a while. So longer term from here, it'll be hard going for a company like Nitro. I mean, on paper, they're doing the right things in terms of signing up the right clients. They seem to be in a good space, zero debt. You know, that's all great, but if your cash flow break even is second half of next year, which is what they announced today, probably a little bit too far in the future, I think, to see any serious buying come in. But having said that, look, I think it looks great just as a trade for a few days. I mean, when I look at the chart, there was a low in March that it dipped under in the last 2 days, and for it to gap up today and rally on massive volume, I know it's up 20% today, but this is the type of stock that might just rally for a few days. And, you know, you could probably be in and out for a quick trade, but longer term, I'd be steering clear for the time being.
All right.